Hi, good day. Today is the 2nd of June 2009, and here we are with the ForexServe weekly update. Last week, we left you with a bearish thought about the dollar, and of course, the rest of the week, the whole of the week really, we saw the markets were in a sideways mode. But only on late Thursday did we see the dollar starting to lose, and on Friday, it had lost quite a bit. In fact, this week, the dollar has again started losing, and we see it weaker across the board against all the major currencies, and especially the pound, which has surged, and it almost touched 165 yesterday, and the euro is also came up to 142. Oil has gone close to 70. Gold is eyeing $1,000. What's all this happening really? We see suddenly after the last few months of there being a great deal of fear about risk, the markets are again buoyant, and risk is back on the plate of the traders, and people are buying anything that they feel is of a better value than the dollar. So basically what is happening is that the dollar is being sold as a hedge, and is being replaced by all and sundry. It's not a question of confidence in the dollar really that is being questioned at this point of time. It is simply a reallocation of resources, or more broad basing of resources, if you like. Of course, there is fear that the US deficit is high, and there could be some downgrading. There could be a question about how the US is going to balance its books going ahead, especially with such a large outlay in its stimulus package. So all those questions are being asked at this point of time, especially with the likes of S&P having downgraded UK debt. But of course, Moody's credited the US with a AAA rating again this year. So on the balance, we have a situation where the US is being replaced with other currencies and other instruments as a hedge in the current times, because there is a general belief that the world has possibly moved out of the Great Recession, as it was called, and there is hope that in the next few months there will be positive growth in most currencies, in most areas of the world. In India, we saw the rupee continuing its upward streak, and it has been following the global markets quite closely, and we expect that to continue for some time, as long as the global markets play out the way they are. Thank you.
Hi, this week we start with the analysis of the Australian dollar, and we have shown here the weekly chart which shows how it has been progressing over the last few months actually, and we see a projection of the first segment, which we might consider as wave 1 of wave B, and we see that it has a minimum objective close to 0.8260, and then of course it has to break above that level to get to around 85, which I think 0.85, which is about the target we expect at least on this bull run as we see in wave B. We then look at copper here, which is the 3 months LME copper, and we see it also has been following the global dictates of being a dollar replacement, so to say, and this also has a kind of a pathway to 6,000. The stochastics and the volumes all does comply to a great extent to that possibility. It's basically kind of a readjustment taking place of the global portfolios. Last week we had commented on the US 5-year IRS, and we see that the 2.7 mark was taken out, and that's where we had suggested that one should go long if it breaks out, and now we're seeing the 3% mark being taken out. There's a sell-off in the bond market which is being reflected here in the 5-year rate, and I think this move could even head up towards the 360, 370 region in the weeks ahead. Thank you and have a great week ahead.